Namaste, dear students. Welcome back. So, I'm here with one more problem on accounting for holding companies. So, problem number 4. So, now it is the problem which has been asked in the year November December 2011 question paper. So, let us look into the problem. From the following details given below, prepare a consolidated balance sheet of H company and its subsidiary S company. Balance sheet as on 31st 3 2011. Capital and the liabilities H company limited, S company limited. So this is the liabilities column. So here under liabilities column you have share capital of rupees 100, 4 lakh for H company limited and 1,20,000 rupees for S company limited. General reserve rupees 1 lakh H company, Yes company rupees 30,000. P&L account rupees 50,000 H company limited. 42,000 rupees S company limited. 8% debentures rupees 1,40,000 rupees in H company limited. Creditors rupees 30,000 in H company limited. Bills payable rupees 10,000 H company limited and 18,000 in S company limited. Creditors 30,000, 20,000. Bills payable 10,000, 18,000. On the other hand, if you look at asset side, properties and assets, H company, S company, they have given buildings rupees 2,90,000 rupees and 1 lakh for S company limited. Plant and machinery rupees 1,20,000 for H company limited and 50,000 for S company limited. Stock H company limited 80,000 rupees, for S company limited 20,000 rupees. Debtors for H company limited 70,000 rupees, for S company limited 30,000 rupees. Bills receivables for H company limited 30,000 rupees, for S company limited 20,000 rupees. Bank balance rupees 20,000 for H company limited and for S company limited 10,000. Investments 800 shares in S company limited, 1,20,000 rupees H company amount column. For S company it is nil. Now total both the sides 7,30,000 and 2,30,000 both the side. For H company it is 7,30,000, for S company it is 2,30,000. On the date of acquisition of shares by H company in S company, the latter had undistributed profits of rupees 18,000 and reserve of rupees 12,000. Adjustment number B. The value of building and plant and machinery of S company were considered at rupees 1,36,000 and rupees 32,000 respectively. Adjustment number C says debtors of H company includes rupees 11,000 due from S company, and also bills payable of H company includes a bill of rupees 2,500 accepted in favor of S company limited. So by considering all these aspects, we are supposed to prepare a consolidated balance sheet. So let us start the solution part. So dear students, now we are doing a solution for fourth problem. So which has been asked in the year November, December 2011. November, December 2011. Okay. So let us look into the first step, that is calculation of shares of holding and minorities. Holding and minorities. So now check out the liability side. Yes company limited shares 1,20,000 shares. So the face value of the share is 100 rupees. So let us calculate. 1,20,000 is the share capital and the face value is 100 rupees. So then number of shares we get 1,200 shares. This is the share capital, this is the face value. So total share capital divided by face value. If we do that, we get number of shares. So 1,200 shares we have. So in this we have to check the minority and majority interest. So the minority and majority interest, to know that, look at the asset side and check out investment number of shares purchased by H company limited. In the asset side it is there, investment 800 shares in H company. How many shares? 800. 1,200 minus 800, how much you will get? The balance is 400. So now cancel the common factor 0, 0, 20, 20 cancelled. So that is equals 8:4. So this can be simplified. That is 4 ones are 4 twos are. That becomes 2:1. So the ratio for this is 2:1. Okay, ratio for this is 2:1. So step number 2, calculation of appreciation and depreciation of assets. So you might be wondering why we are doing till the problem 3 we have solved, there was no any appreciation depreciation, we didn't did anywhere. See, in this problem, if you look at adjustment number B, so I'm showing you the adjustment number B. The value of building and plant and machinery of S company were considered at rupees 1,36,000 and 32,000 respectively. Plant and machinery 32,000, building 1,36,000. So look at, it is S company limited. So building value in S company limited was 1 lakh. So now it is 1,36,000. The same way plant and machinery was 50,000. Now it is 32,000. So in case of building, 36,000 rupees has been increased. Correct. In case of plant and machinery, 50,000 is there. Closing balance 32,000 he has given. So 18,000 rupees has been decreased. So decreased value 18,000 is called a depreciation. Increased value of 36,000 is called appreciation. So to calculate this, we have to check and we have to set off. That means the more value, that is appreciated value and depreciated value, can be adjusted. So that is how we have to adjust, like appreciation minus depreciation. That is how we do the set off. Okay, so let us look into it, how we are going to do this calculation of appreciation depreciation of asset. So building value, first let us take buildings. So buildings value in the adjustment he has given 1,36,000. In the balance sheet value, it is in the adjustment whatever he has given, closing value, balance sheet value opening, so that he has given as a 1 lakh rupees. So 36,000 whatever we get here, we call this as a appreciation. Okay, so the same way we'll do for plant and machinery. That is adjustment value is 32,000. Balance sheet value which has been given is 50,000. So 32,000 minus 50,000 is 18,000, which is in minus. So we call this as a depreciation. So one side we have appreciation and other side we have a depreciation. It is very simple. Adjustment value is closing. So when closing balance is greater and opening is lesser, we call it as appreciation. And when closing balance is lesser, opening balance is greater, then we call it as a depreciation. So now let us set off appreciation and depreciation. So 36,000 is the appreciation. Appreciation, how much? 36,000 less set of depreciation. How much? 18,000. So adjusted that internal year only. So the left out final profit is 18,000. Final profit on appreciation is 18,000. Understood? So next is third main. Calculation of total pre-acquisition profit. Pre-acquisition profit. So let us see pre-acquisition profit. So usually that will be given in the adjustment. So look at the adjustment number A. So he said on the date of acquisition of shares by H company, in S company, the latter had undistributed profit of rupees 18,000 and reserve of rupees 12,000. So profit, how much? Profit pre-acquisition 18,000. Then we have set off profit 18,000. That is by appreciation and depreciation from second step. So total we have 36,000. We have 36,000. Clear? So next we have to do fourth step, calculation of minority interest. Minority interest. Calculation of minority interest. So under that, first take cost of shares. So how many shares held by minority? 400. Correct. What is the face value? 100. So 400 into 100, 40,000 rupees. Okay. So then add total reserves. Add total reserves. So how much total reserves it is there? Check out. General reserve in the liability side of the balance sheet. S Company Limited. General reserve in the balance sheet, liability side. So how much? 30,000 rupees into, what is the ratio of minority? 1 by 3, correct? So 2 is to 1. So majority, 2 plus 1 is 3, 2 by 3 is 2. 1 plus 2 is 3. So that is 1 by 3 is for minority. So minority ratio is 1 by 3, correct? So now take 30,000 into 1 by 3. So that comes to 10,000 rupees. Next, add profits pre-acquisition. Pre-acquisition profit how much? 36,000 rupees, which we have identified here. That is through working note step 3. So I am mentioning step 3. Out of step 3, how much we got? 36,000, correct? 36,000 into 1 by 3 again. 36,000 into 1 by 3. So how much you will get? 12,000. Correct? So next, add total P&L account. So in P&L account, how much there is given? Go to the balance sheet and check S Company Limited P&L account balance, he has given 42,000 minus 18,000 rupees. 18,000 minus 18,000 rupees. So that is which has been given in the adjustment. Deduct this adjustment, 18,000. So you will get 24,000 into 1 divided by 3, because we are calculating minority interest. So minority ratio, 24,000 into 1 by 3 is 8,000. So total it 40, 50, 62, 70,000 rupees is total minority interest. So minority interest is 70,000 rupees. Okay. So next further step we are going, fifth step. Calculation of cost of control. Calculation of cost of control. So investment by holding company. Investment by holding company. So how much they have invested in holding company? Check out. Asset side, investment 800 shares in S company limited, 1,20,000 rupees. So 1,20,000 rupees I have copied. Less face value. Face value. So how many shares? 800 shares. What is the face value? 100 rupees. 800 into 100, it is 80,000 rupees. So the left out balance is 40,000. So this is what we call it as a goodwill. The excess amount invested on capital is always considered to be a goodwill. So next, going to sixth point. Sixth step, that is calculation of pre and post acquisition of profit. Pre 36,000 into majority ratio is 2 by 3, that is equals 24,000. We will get 24,000. This needs to be transferred to CR account, capital reserve account. Okay, then post acquisition. So he has given 42,000 rupees. So I am taking 42,000 minus 18,000. Which has been given in the adjustment. So that how much you will get? 24,000. 24,000 into 2 divided by 3. That is 16,000, which needs to be transferred to P&L account. The same way, let us calculate for reserves. Pre-acquisition 12,000 rupees, which has been given in the adjustment, into 2 by 3, that is going to be 8,000. Post this to CRR account. And the same way, post acquisition profit, post acquisition general reserve. So he has given 30,000. 30,000 minus 12,000. 30,000 minus 12,000. This is given in the adjustment, so that I am deducting. So we'll get 18,000 into 2 by 3. 18,000 into 2 by 3 is 12,000. So 12,000 should transfer to P&L account. Okay. So we are done with the working note. So now we are supposed to prepare a consolidated balance sheet. Okay. So we are supposed to prepare a consolidated balance sheet. So let us start the solution. Consolidated balance sheet. So you have to copy the questions. If you don't copy the question, so we cannot solve the problem. So always remember that. Okay. Consolidated balance sheet. Particulars, rupees, rupees. So first main we always take share capital. Share capital. So share capital of H company limited you take. So that is 4 lakh rupees. Directly I am taking 4 lakh rupees. Okay. After that, general reserve. Second one is reserves and surplus. Reserves and surplus is the second main. Under that we'll have general reserves. General reserves. So general reserves of H company limited, how much? 1 lakh rupees. H company. Okay. So then general reserve H company limited is 1 lakh. So I'm going to carry that 1 lakh directly. Then we have transferred some amount to CRR account. So which has been done in the working note. So which needs to be transferred to CRR account. So look at here, 24,000 for CR account, 8,000 for CR account. So 24 plus 8, 32,000 rupees. So 24 plus 8, 32,000. So capital reserve account. So how much? 32,000. So it is in the working note. Working note number, we'll mention the number also. Working note number 6, so that we don't get confusion. Okay, so this 30,000 we have taken it from. Then we have to take P&L account also. P&L account. So P&L account of H company limited, how much they have given? 50,000 rupees. So take that 50,000 rupees. Then the same way P&L account, working note number 6. Working note number 6 we have transferred here 16,000 and here 12,000. So 16 plus 12 is 28,000. So how much? 28,000. So add this 28,000 together and total it, put it to outer column. 78,000. 78,000. So next is we have to take long-term liabilities. So here we call that as a, what we call it as a here, non-current liabilities. Non-current liabilities. Non-current liabilities. So under that take debenture. So under that non-current liability we have only one item, that is debenture. So debenture, take down. So H company limited debenture, 8% debenture in H company limited is 1,40,000 only H company, because H company is nil. So I'm not considering anything else. So next we are going with the fourth head, that is current liabilities. current liabilities. So under this current liabilities, let us mention what are all they have given. Creditors. So creditors is there. So first take H Company Limited creditors 30,000 rupees. Then take S Company Limited creditors 20,000 rupees. And less adjustment. In the adjustment, look at adjustment C. Debtors of H Company Limited includes 11,000 due from S Company, and also bills payable of H Company includes a bill of rupees 2,500 accepted in favor of S Company Limited. So how much? 11,000 rupees is there. So adjustment whatever he has given, that should be deducted. So now add and deduct. 30,000 plus 20,000 50. 50 minus 11. 50 minus 11, 39,000. 39,000 outer column. Understood? So the same way, bills payable. Bills payable. H Company how much? 10,000. S Company how much? 18,000. Less adjustment. So in the adjustment he said 2,500. So that should be deducted. So 10 plus 18, 28, 28 minus 2,500. So 28 minus 2,500 means 25,500. Use the calculator. 25,500. Okay. So last but not the least, we have to take minority interest. Minority interest. How much we have done? So check out step number 2. 1,50,000 rupees. Step number 2, 1,50,000. Minority interest is 1,50,000 rupees. That's all I have taken every item. Sorry, minority interest not 1,50,000. I think I just gone through previous problem. It is step number 4, 70,000. Minority interest is 70,000. So now use the calculator and total this. Use the calculator and total. 4 lakh plus 1 lakh plus 32,000 plus 78,000 plus 1,40,000 plus 39,000 plus 25,500 plus 70,000. So total 8,84,500. 8,84,500. 8,84,500 rupees. So next, going forward, asset side. Asset side. So that is going to be a fifth item. That is non-current assets. Non-current assets. Non-current assets. Non-current assets. Current assets means we have to take all the fixed assets. Okay. So first let us take buildings. Buildings. So buildings, first you take H Company Limited. How much H Company Limited? 2,90,000. Then take S Company Limited value of building 1 lakh. 1 lakh. So together it is 3 lakh. It is 1,36,000. 1,36,000. 2,90,000 plus 1,36,000. 2,90,000 plus 1,36,000. So total 4,26,000. 4,26,000. 4,26,000. So next is plant and machinery. Plant and machinery. So H Company Limited 1,20,000 and S Company Limited 50,000 rupees. S Company Limited 50,000 rupees. So here we should not take 50,000. There is a depreciated value which has been given in the adjustment. So this is also we should take from adjustment. This value is also from adjustment. So total it. So total plant and machinery value is 1,52,000 rupees. Then next we have goodwill. So goodwill. So we have done the working note. So we have identified. So the value of the goodwill. So we have identified in the step number 5, calculation of cost of control. Goodwill is 40,000. So take that goodwill into non-current assets. 40,000 rupees. Okay. So next we have to go for current assets. So let us go for current assets. Continuation. So current assets. Current assets. So under that, let us take one by one. So we have a stock. So stock value of H company is 80,000 rupees. Then S company stock is 20,000 rupees. So total it and put it to outer column. So it is going to be 1 lakh. So after that, let us take debtors. So debtors value of H company and S company. Debtors value of H company is 70,000 and S company is 30,000. But there is a adjustment in the C. Debtors of H company includes rupees 11,000 due from S company limited. So that needs to be deducted. So less adjustment 11,000. So deduct that 11,000 and put the rest of the amount. So 1 lakh minus 11,000 is going to be 89,000 rupees. So then take bills receivables. So value of H company of bills receivables 30,000 and in the S company limited it is 20,000. Less adjustment, how much? 2,500. Less adjustment 2,500. So 50,000 minus 2,500 is 47,500. 47,500. So now let us take bank balance. Bank balance. H company limited bank balance 20,000. S company bank balance 10,000. Total it and put it to outer column. So it is going to be 30,000 rupees. After that, we don't have anything else to do it. So now let us total the asset side. So we will check out how much it will come up to. How much it will come up to calculate. So first one is 4,26,000 plus 1,52,000 plus 40,000 plus 1 lakh plus 89,000 plus 47,500 plus 30,000 plus. So 8 lakh 8,84,500. So both the side total 8,84,500, 8,84,500. So the problem got tallied. So we are done with this consolidated balance sheet. So I'll come back soon with one more video. Till that, take care. See you soon. Bye bye. Stay safe.